Okay, the latest news from Europe is not good, and it's too interesting not to make a video about. So here goes. I pulled up a few articles, the first one's from CNN. Europe's stagnant economy is vulnerable to a shock from China. So as I said, the most recent news from Europe is not good at all. And this is from before the impact of the coronavirus is being felt. So, if anything, you'd think that the shock from the coronavirus impacting China's economy will make things worse. Obviously, that's how it's going to work. Anyway, here's what they have to say. Recession fears are stalking Europe again after Germany's economy flatlined at the end of 2019. The coronavirus now threatens to slam exports to China. Exports to China were slowing anyway because China's economy was already slowing down. And also, as China was moving up the value chain, it was starting to make the goods it used to import from Europe itself at much cheaper costs due to its lower labor costs. So those two factors were leading to an end of exports from Europe to China. And China's economy was already slowing down steadily. The growth rates China was posting, like 4 or 5%, are normal for a middle-income country, which China now is. So you shouldn't be expecting China to return to its earlier growth rates as something that's automatically going to happen. So anyway, let's see what they have to say next. The German economy did not grow in the final months of last year, setting up the country for a difficult 2020, just when it was meant to begin experiencing a revival. Weakness in the world's fourth largest economy reverberated across the Eurozone, where growth slumped to a 7-year low of 0.1% in the final quarter of last year. That makes Europe especially vulnerable to the looming hit from the coronavirus outbreak. More people globally have been affected, and China's economy is still struggling to get moving again after the extended holiday. The Eurozone should be about to turn a corner, but the coronavirus now means that the first quarter could well be a write-off, said Klaus Visten, chief Eurozone economist at Pathia Macroeconomics, sent a research note. Again, China's economy is not going to be roaring back anytime soon, even without the coronavirus. I mean, it wouldn't be getting even worse without the coronavirus, but a slowdown like that is normal as an economy like China transitions to a middle-income economy. And even if the Chinese economy did return to its earlier higher growth levels, it's starting to make the goods it used to import from Europe at much lower prices, so even then its demand for European exports would still be declining. So, well, those are just factors that are occurring that mean that they should be considered. Germany was already in a feeble condition, logging growth of just 0.6% for the whole 2019 amid weak global auto sales, the US-China trade war, and uncertainty over Brexit. Economists thought that the economy, which has been held back by its manufacturing sector, would start to pick up early this year. Then came the outbreak of the novel coronavirus. China is the third biggest destination for German goods exports, and a drop in demand there is expected to further damage the country's factories. In 2018, the country's exported goods worth more than 94 billion euros to China, more than 4 times as much as France. German car makers, which do big business in China, are exposed. Major automakers sold fewer than 2 million cars in China last month, an 18% plunge from a year earlier. The impact from the coronavirus on the Chinese economy is likely to delay any rebound in the manufacturing sector, as it at least temporarily disrupts supply chains, said Carsten Brzezinski, chief German economist at ING, wrote Friday. That's drummed up talk about a potential recession in Germany, or 2 consecutive quarters of negative growth. Deutsche Bank, in a note to clients earlier this week, called the recession in the first half of the year quite probable. Okay, so they're just saying recession's in the cards. That doesn't bode well for the rest of Europe. Cunningham predicts that economic growth in the Eurozone will come at just 0.1% in the first quarter, 0.2% between April and June. Without momentum at the start of the year, he expects annual growth this year will be weaker than in 2019, when it was 1.2%. The full impact of the coronavirus on global economy remains unclear, with little clarity about when the pace of infections will level off and begin to decline. In the meantime, workers in the world's second largest economy have had a hard time getting back to work, even as some bigger companies try to reopen their doors. Looking forward, the coronavirus provides a substantial risk for the expected global recovery, as hopes were pinned on an improvement of the Chinese economy, Deutsche Bank said in its note. Should the situation continue to deteriorate, the European Central Bank may need to step in, pushing interest rates further into negative territory, or increasing monthly bond purchasing. Yeah, the European Central Bank is already doing all that it can do that's already going to be having an effect. And it's out of things that it could do that will make any difference on top of what it's already doing. President Christine Lagarde had started to review these unconventional policies, and the expectation had been for the central bank to keep policy on hold in the meantime. Okay, looks like this article's over. Now let's see what the next article I pulled up from the New York Times has to say about this. Coronavirus begins to sap growth as Europe's economy slows. Germany registered zero growth in late 2019, and the prospects for a turnaround in 2020 are dimming. Growth in Germany came to a halt in the last quarter of 2019, as consumers became more cautious about spending, leaving the economy vulnerable as it begins to feel the effects of the coronavirus outbreak in China. Economic growth in Germany was zero from October through December, the Federal Statistics Office said on Friday, down from 0.2% growth in the previous quarter. The chances that Germany will bounce back during the current quarter are slim because of the coronavirus outbreak in China, which has hobbled one of Germany's most important customers and suppliers. Disruptions caused by the outbreak are becoming more visible in Europe. Fiat Chrysler Automobiles said Friday that it had stopped production at a factory in Serbia because of the storage of parts made in China. The shutdown, apparently the first by a car maker in Europe, will add to concerns that the coronavirus outbreak could sap what little growth the continent has been able to muster recently. The crisis risks delivering a substantial blow to the battered industrial sector. Agnel Televara, an economist at Oxford Economics, said in a note to clients Friday. The Eurozone grew only 0.1% during the last 3 months of 2019, compared with the previous quarter, the European Union's official statistics office said Friday, confirming an earlier estimate. That was the slowest rate of expansion in 6 years. Growth for the full year was 1.2%, down from 1.9% in 2018. Germany's performance was not as bad as some economists had expected. A steep decline in orders for industrial goods had led to predictions of a recession. Overall growth for 2019 was 0.6%. Until recently, spending by German consumers had helped compensate for a slump in manufacturing, but consumers became more cautious at the end of the year, perhaps unsettled by headlines about major job losses at German automakers. Companies like Daimler, which reported a quarterly loss this week, have been cutting jobs because of the slack demand and the cost of developing new technologies they need to remain competitive. Problems in the car industry are not limited to Germany. The French carmaker Renault said on Friday that profit practically evaporated in 2019. the company acknowledged that it had been a troubled year. Net profit in 2019 plunged to 19 million euros, or about 21 million, from 3.5 billion in 2018, Renault said. Renault also warned that its global goal of keeping sales steady at 56 billion euros during 2020 could be endangered by the possible impacts related to the coronavirus health crisis. Renault shut down its factory in Busan, South Korea, on Tuesday because of supply chain problems. Renault plans to reopen the factory, a joint venture with Samsung, next week, but the factory in Wuhan, China, the epicenter of the outbreak, will remain closed at least until next Friday on government orders, a Renault spokeswoman said. In China, two German car makers, BMW and Volkswagen, were preparing to reopen factories that had been closed since the beginning of the Lunar New Year. The automakers are eager to resume production in China to avoid any more lost sales in the world's largest car market. Well, even though they're German-owned, since they're car factories in China, presumably producing cars for the Chinese consumer, they're really more about the Chinese economy than Europe's economy. But still, the impact of the virus is interesting. Volkswagen, which gets almost half its sales from China, said all its factories would be running by Monday. The company acknowledged that it was facing challenges due to delayed nationwide restarting of supply chains, as well as limited travel options for production employees. Fiat said supply problems had prompted it to move forward the dates of a planned shutdown at the plant in Kragujevac, Serbia, which produces Fiat 500 subcompact cars. The company said it did not expect the impact to be too dire. We are in the process of securing future supply at those affected parts, and production will be restored later this month, Fiat said in a statement. We do not expect this change in scheduling to impact the total production forecast for the month. So most of the bad growth numbers are from last quarter, which was before the outbreak happened. And they're saying that the impact and disruption of the coronavirus outbreak is only going to make things worse. So things are not looking too good for Europe's economy right now. Very interesting. So I think that's it. If you like this video, please like the video, leave your thoughts in the comments section, subscribe to my channel, hit the notification bell, and share this video with anyone you think might be interested.